Welcome back to the channel. If you're new to the channel, my name is Errol Coleman. If you're not new to the channel, sorry for the lack of uploads. I've been really taking advantage of the slow April and May to really refine my own process, study a lot, track my statistics, do all that kind of stuff, but really using the slow market to take advantage of that because it's been dreadfully slow in April and May for the small cap stocks at least. And today it's a good day for small cap stocks. Last week we had AMC, we had VTNR Thursday, Friday. VTNR turning into a multi-day run, and it even gapped up over the weekend. And then today we're having more gappers on the charts and things like that. And I just want to go over a few stocks today, do some technical analysis, talk about some things to look out for if you're going long and if you're going short. And then after, I want to talk about one of the trades that I did take today and something that I even learned today and something that I could be doing better. So I hope you can learn from me, and let's just get right into this technical analysis. Today, waking up, we had OEGN that was on the gap scanner, just on the top percent gainers, and it was gapping up about 60%, if I'm not mistaken. Yeah, about 60.7%. It was gapping up, and in the pre-market, we were talking in the chat about, well, this stock is pretty strong in the pre-market. It had good news on an acquisition. It's not that the news really means anything, but the news, the catalyst, is what brings attention to the stock. So we are recognizing that, and we were just talking about, I wonder what this stock is going to do or how it's going to look off of its first pullback. And right in the morning, you can see these candles are green, but these long wicks is telling us this is where price reached before the candle closed. So this is just letting us know that the price dipped really fast near the VWAP and then bounced really fast. But if you're someone that trades these morning dip buys or whatever the case might be, this is why it can be really important to sell and take some profit into strength and not wait into weakness, because this comes back down and then knocks out the day low where most longs are going to be putting their stop losses. And then once it knocks out the day low, you can see it may have accumulated more shorts, and then it squeezes the shorts out at the day high. And let me just put these levels on here to show you exactly what I'm looking at and something you can also look out for so you don't get trapped in. One thing people are going to look out for is this pre-market high, looking for that pre-market breakout. And let's just put these tools over the chart so you see exactly what I'm talking about. A lot of people are going to put their limit orders or a lot of longs just by human nature, and by just trading for a while, you kind of see what people tend to do in the charts. They'll usually put orders up here to automatically fill them so that they can actually catch the breakout. And you can see it broke out, fills their orders, and then today it just flushed on them and then breaks the day lows and knocks the longs out of their positions. And then what's really interesting, after it does that, when it breaks this day low like we just talked about, that's going to be attractive for short sellers to maybe start shorting the stock, which in my opinion, I still think you need more of an edge or more of a reason to short a stock rather than it just breaking its day low and because it's up 60%. But I'm just going to show you what a lot of people on the charts are going to be thinking. And this is why technical analysis is so interesting, because the candlesticks on the chart is literally just like painting a picture of everybody's psychology. That's why it's so interesting to go back on it and read some of this stuff. But after it breaks its day low, now this area, especially, it comes down, flushes below VWAP, consolidates, looks weak, breaks its low again. It's going to look attractive for short sellers, so it's going to suck the short sellers back in, and then you can see it squeezes the short sellers right back out, because most short sellers are going to be risking the day high, which now it's not the pre-market high anymore because it broke it this morning. So the new day high is going to be 630. And what happens after it breaks 630 again? It did the same exact thing it did this morning. It takes a high and then dumps on the longs. So again, this is why you have to be so careful with putting your limit orders to fill you on the breakout, because most breakouts are fake outs. So sometimes it's really not worth just buying the breakout. Sometimes it might be better to sell at resistance levels rather than buying at resistance levels. So after that, it gets rejected again, falls under VWAP. Maybe some shorts are attracted to this again and it accumulates the shorts, and then this grinding action is what knocks a lot of short sellers back out right here, this grinding action. And then it's looking bullish again, because let's just rewind a little bit. Before we even see this big red candle right here, most people, they're going to think, wow, this is looking bullish. They might even start drawing things like this on their chart. looking for a, a potential breakout right here, right? So a wedge to squeeze into. So this is what many people might be looking before we even go further on the right side of the chart. But another thing you want to look out for, again, these rug pulls. So what I've noticed personally is once stocks start to do this type of funny action where it sucks longs in and then dumps on the longs, sucks shorts in and then squeezes the shorts back out, sucks longs back in, dumps back on the longs. Once I start seeing that type of game played with the stock, personally, I would just like to watch the stock and not even touch it. And it's not even something I think is even worth trading, because then we see again, this takes this little high right here, and again, maybe more longs are trying to buy after these highs are being broke, and then we get a rug pull, a pretty nasty rug pull. So always set your stop losses, never bag hold, because this could rug pull, dump on you and fade for the rest of the day. Because you might say, well, if I get caught in something like this, why would I sell? I would just hold because the stock can come back and I can make back my money. I'm just letting you know right now, if you use that mindset into trade after trade, it's not going to work in the long run. You're going to get caught in something to where it's going to dump and fade for the rest of the day, all the way back down to $3.60, and the stock may never come back. Maybe in like a year, 2 years, but who knows if the stock is going to go bankrupt before then. So always, always, always stay true to your risk levels. If you're someone that's going long and you do get stuck into something like this, personally, I would set your stop loss underneath the low of the consolidation or underneath some type of low, depending on your position size, because I don't know your position size, I don't know where you entered or anything like that. But once you start to see previous lows getting taken out, it might be wise to just get out your position and set your stop loss around areas like that. So you can see right now it's just consolidating, pushes up, rug pull, pushes up, grinding action, pops, rug pull, just really annoying type of stock to trade. So again, if you're seeing something like this, it may not be worth your capital and it may not be worth your mental capital. Something like this you might just want to watch and just leave and call it a day. Even if it ends up breaking out, even if it ends up dumping and you're a short seller and then you're feeling FOMO, don't feel FOMO. We get opportunities over and over and over again, and one trade should not be more important than the next. So I just want to leave that with you. We also have VTNR we'll go over real quick. VTNR is a multi-day runner that started last Thursday. And shorts getting stopped out, squeezing shorts again this Friday afternoon. This is really interesting right here. This double bottom, this reclaim of VWAP squeezes a day high like we talked about. Many short sellers are going to be putting their stop loss at the day high. So squeezes the short sellers out, has a pretty strong close, gaps up 1150 for the high in the pre-market, pulls back, squeezes the shorts again, because we talked about again, short sellers are most likely going to put their stop loss at the day high, stops out shorts, and then dumps back on breakout buyers trying to buy the breakout. So personally, something like this, now I am short biased, but me personally, I would prefer to wait on an actual first red day and not trying to predict the first red day. I would literally wait for the first red day on this stock so that the momentum fully cracks and then maybe start to short a nice bounce after that. Because again, no matter the news, these are bad fundamental companies. A lot of these eventually will come back down, because in reality, good fundamental companies don't go from $1.76 to $11.50 in just a matter of 3 days. That is just like pure trading action going on. Shorts getting stuck in stocks, getting squeezed. Similar action with like AMC and GME if you're familiar or not familiar with short squeezes. Shorts piling in, getting squeezed out, increasing the stock price, and then when the stock price increase, that attracts breakout buyers or long buyers or momentum buyers, pushing the stock price even more. And then over and over again, short sellers get stuck, squeezes the stock price right back up. But me personally, I would wait on an actual first red day on this if you're looking to short, just because it can be a little safer. And again, the stock is up like 460 something percent in just 3 days. So there's really no reason at all to rush into any trades or trying to make like the most money or anything. It's up 450% in 3 days. Just be patient. There's enough room for the stock still to go down. And we also have so many more tickers going on. Another one we have today is WPG. Oh, wow. Oh, wow. Let's just first things first, let's draw a line at the day high like we always do. We'll use our tool right here. And I just want to let you guys know what causes a lot of these big moves is the short sellers. The short sellers are literally the fuel to the fire. And personally, I took a short on this morning after it spiked. I shorted around here. My average is around 343. So when I first shorted, my average was around 343. And if you're a short seller, you can use my mistake as a lesson. I shorted around 343. That was my average. The stock then flushes beneath VWAP, and we never got a good bounce. You know, before I size in even more, what I typically like to see is at least this type of decent bounce, and for it to bounce somewhere into this area up here, right? That's what I'm personally looking for, because sizing into weakness can be pretty dangerous. And what happened was, after it came back down, I covered some profit here, but I had sized in a little more, and this bounce then took back my profit. Just this bounce right here. And this bounce really doesn't surprise me, because after the stock spiked, it dropped so fast. I just know other short sellers, or I'm not going to say I know, but when a stock drops really fast, sometimes other short sellers may start to feel FOMO because they didn't get the entry that they wanted to. And one natural kind of reaction short sellers will have is to chase into weakness. And what I did was, I didn't chase into weakness, but I added more shares into weakness. So after covering for some profit, this bounce then took back my profit. So that's one lesson you can learn from me. After a stock drops too fast, don't size into weakness. Stay true to your risk levels, and always take profit when half of the move retraces. So that's one thing I will say. And after you see this type of action, a lot of times after the short squeeze can hold. And many short sellers are so stubborn sometimes. They don't want to get out of the stock. And again, why is so many short sellers shorting this? It's been a dead April. It's been a dead May. So there's many active traders that really want to put a trade on. So after you see this type of action, it might be best for you to just leave it alone if you're a short seller. Stay true to your risk level. Like we said, one trade shouldn't be more important than the other. It doesn't matter the case. It doesn't matter how long you haven't put a trade on or this or that. A trade can come tomorrow. Three trades could come tomorrow. You never know how the market's going to react, and it's just not worth putting more emphasis on one trade than the other, because one trade is not more important than the other. And then after this, you can see it breaks the day high, breaks the actual resistance level, and then holds and then squeezes. We've seen this multiple times. I can show you another move. If you guys want to, you can go back on CAPR. I remember it like the back of my head. CAPR last April. Go back to the move in CAPR last April. Very similar move. Spikes, hits the resistance, comes back down, and then use the resistance as support, and it squeezes. A move very similar like this. So now if you're long, personally, I would start getting out. But once there's a stock that short sellers are really looking to short, once that resistance flips to a support, you can then go long on it. And again, you can track, if I'm not mistaken, CAPR last year in April. It's almost an identical setup I'm remembering in my head. So I know that was a lot. I didn't want to make this video too long. I know I was speaking kind of fast. But technical analysis is just really cool to see what people are thinking on the charts and things like that. So if you're long and you see this big spike, I wouldn't chase something like this. Look how far away it is from the VWAP. That's just not a good trade to take now. But when you recognize things like this, you see the resistance turn to support and it's heavily shorted, you could probably take advantage going long. That's going to be it for today. I just went on like a quick rant, but I saw all this action going on. We haven't had any, good stocks to do some technical analysis to explain some things on. But I want to get this video out there for the other people that trade similarly that I do and trade small cap stocks and that love using psychology to trade and things like that. So that's going to be it for today's video. Don't chase WPG now that it's spiked too much, because it's probably over now. But we'll see what we get for the market. Hopefully June picks back up, June, July. And if you track statistics and look back to last year, April and May was slow last year. So a lot of people it might come as a surprise, like, man, why is April and May so slow? If you track previous statistics, it's kind of just our normal market cycles that we're going through. So just be patient. The trade will come. I think the message for today is just not one trade is going to be more important than the other. Follow your system no matter what, and that's going to be it. So I hope you learned something new. If you like these technical analysis breakdowns, I would appreciate a like on the video, and make sure you subscribe so you don't miss any future videos. I'm also going to be getting up more videos on how the options trading. I'm a beginner in options. I've been trading with Tasty Trade. Tom Sosloff mentors Kay and I, another content creator, and then we've just been going through that live on Mondays and Fridays. So you can tune in live 1:30 Central Time. Mondays and Fridays will be live this Friday, so you can check out the portfolio, see how things are going, all that good stuff. But I'm going to try and get out more videos on the channel as well to let you know some of the things I've been learning and just how the overall experience has been going too. So thanks for tuning into this video, and I'll catch you in the next one.